Hello traders, this is Dan in the Master Trader Green Trading Room, and we've been watching this cannabis marijuana sector for a number of weeks now, ever since this TLRY here had an incredible breakout on the daily chart, just went parabolic here. It was trading, 24 bucks up to 300 in a couple weeks. And so we've been watching them for interesting trade opportunities. Not to trade the stock on this one per se, even though we watch a number of them in the sector and we do trade stocks when we get great setups, but I wouldn't on this one. It's too high risk, too high volatility, and too gappy. But we will sell out of the money very expensive either call spreads when we get a topping pattern, and I posted in our private Facebook group on this day that we were getting very close to doing that on this gap and range expansion. This was a 150 point range in one day, which was greater than the whole range of the stock right up to that point in time. So volatility is off the charts. I'm always watching it on a 15-minute chart, and I noticed in a little thumbnail. And so here's my 15-minute chart. I see it breaking out. I pull it up. Here's the wild ride. This is an e-ticket at Disneyland World that I want no part of. So let's just watch it. Here's another gap down, up, still looks lower. This is a bullish gap on a 15-minute chart. Sideways, breakdown, gap up again, sideways, attempted breakdown, no follow through to the downside, support, support, support. It's building a higher level of support by definition. So these all-time lows, not all-time lows, but of this 15-minute chart, 97.40-ish. We had a beautiful breakout here on the 15-minute chart. So step 2, I pull up my options, stock options on TLRY. These are the ones that expire tomorrow. The stock right now is trading at $133. So it's high risk because of the stock itself. It's high risk because these are very illiquid options. So this is only for very advanced option traders. One of our strategies is to play market maker, meaning find a big spread like this, 0 by $1. Here's 0 by 70 for the 81 strike. This was the 87. And you try to go low offer to see if you can get filled by selling an $87 put, which is, what's that, $46 out of the money for tomorrow? That would be a gift. So let's, even at the monies, which I would never do, but see, the problem is okay, here's a tight one, 140 by 180. But then the problem is so let's say I wanted to do a put spread. So I'm going to sell to open the 110s, and then I'm going down. Okay, this one's fairly tight, the 95s. So the midpoint on that is $1.40. But a 110 strike less 133 is only $23 a cushion. But, good luck getting filled on those. Let's go out to next week, which is 8 days to expiration. So the same thing. Look at all these zero bids. Zero bids. That's the problem. Here's a tighter one. Even though there's no open interest, look at this. This open interest, 28.27 for the 80s, and it's still 15 cents. That's crazy spreads. But I'm looking for tight ones. So the 75s, you could get 50, try to start at 80 and then price some discovery, see where you can get filled if you wanted to do it naked. But here, 85 by 165. The implied volatility here is 205%. So these options are pricing in a $35 expected move in the next 38 days. But just to show you the at the monies, I mean, look at that, 17, 18 bucks, which I would never do. I'm looking to sell way out of the money options. I did a small lot of selling the $80 naked puts that expire tomorrow. So that's it. That's how we combine our option trading around high volatility new stocks. And that's it. So happy trading and see you all next time.